San Diego's housing market is one of the most expensive in America, and could 2024 be the year where we finally see it get cheaper to buy a house in San Diego and where home prices crash? Well, looking at data available on Reventure app, you can see that San Diego home values are approximately 20% overvalued. This overvaluation suggests that there is downside in San Diego's housing market, and that if you do buy today in 2024, you could eventually see the value of your house drop. However, a persistent issue in San Diego's housing market today is the fact that inventory levels are still historically low. And it's these low inventory levels that have stopped prices from falling like they should. With the active inventory on San Diego's housing market right now being 2,900 homes for sale. And you can see this is actually up from where it was a year or two ago, which is a positive sign. More listings compared to last year. However, you can see that we're still way below pre-pandemic norms in inventory, which is something that has kept prices stable. And in fact, kept prices going up. Values in San Diego are up 10% over the last year. Something that is extremely frustrating for you as a buyer in San Diego. I know a lot of you have been waiting to buy for a long time, and these sky-high prices and increasing prices, they don't make sense with mortgage rates at 7 to 8%. How is it that a 3-bed, 2-bath house that's 1,400 square feet can get listed for $885,000? I mean, look at the pictures here, folks. This is like basically an apartment masquerading as a house. I mean, it's not bad. A nice little backyard, but geez, 885,000, that makes your monthly payment almost 6,000 a month to buy this house, which is, one of the cheaper ones in San Diego. If we zoom in here, we can see lots of price points over $1 million, like 1.25 million for this 3-bed, 2-bath house that's coming soon. 1.25 million. You can see this thing last sold in September 2008 for $326,000. So the owner of this house, they're trying to make a 4x return on their investment. And I think what some of these sellers are trying to take advantage of is the fact that in San Diego, they really don't build much new housing at all. And specifically in San Diego, they don't build new single family homes. Like, it's just not something that happens. The builders, they're not there. They don't pull permits there. There really isn't much space to build. If we actually go to Reventure app, we can see the number of single family permits pulled in San Diego County was only 3,100 single family permits in the last 12 months. This is a shockingly low figure. 3,100 single family permits. You can see actually in the last bubble, they were pulling almost 10,000 single family permits. Now they're only pulling 3,000. The building and permitting, it collapsed after the last crash, and it never recovered. And so, this is problematic, because even like up in Riverside, they're pulling 12,000 permits a year. Up in LA, they're pulling 12,000 permits, but in San Diego, it's only 3,000. This is one of the lowest permit counties in America. Just for comparison, in Phoenix, they're pulling 28,000 permits. In San Diego, they're only pulling 3,000. This lack of building is one of the main things that's keeping prices high, keeping inventory low. However, I don't buy that this is sustainable in San Diego, everyone. The math simply doesn't make sense in this housing market right now. And when I say the math doesn't make sense, let me explain what I'm talking about. For the average household in San Diego that earns a median income of 104,000, which, it's pretty high compared to other places, but 104,000 in San Diego, like, that is not enough to buy a house, because your yearly house payment for just a standard house is 73,000. So that's a 71% house payment to income ratio. We can see, like, before the pandemic, it was 38% house payment to income ratio when the prices and the rates were cheaper. And so this situation of the house payments being 71% of people's incomes, I mean, the only other time we saw this in San Diego was 06, before the last crash. And in that last crash in San Diego, prices went down 37%. It's something that, not a lot of people remember, but I'm going to show you folks. Yeah, it was a 36% decline actually in San Diego in that last crash. Prices went from 537,000 to 344,000. And so we do actually have historical precedent for pretty big home price declines in Southern California. There was also a big decline in the early 90s. If you guys were around in the early 90s in San Diego or LA's housing market, I'm sure you remember that housing downturn. So we actually do have a lot of historical precedent for fairly big home price corrections coming in Southern California. I think the question is on your mind out there as a buyer and investor is like, when is that correction coming? And, is it coming at all? And to answer that question, I want to introduce you guys to a metric called the Home Price Forecast Score on Reventure app. This is a metric that to project the future of home values based on fundamental data points like appreciation, inventory, price cuts, and days on the market. And you can see right now in San Diego, we are at a score of 56, which is above average. It's actually indicating that prices are likely to be stable or going up the next couple months. You can see we were like in a major seller's market in San Diego 2 years ago. Then we started going towards a buyer market. Then we're kind of now going back to a seller's market. All has to do with inventory, price cuts, and days on the market. And so what you should look for if you're a buyer in San Diego is, turn this to the monthly view here. And what you should look for month by month is this home price forecast score trending down? Because if it starts trending down again, like it did in late 2022, we will likely see declining prices if it starts trending down. And you can actually see there's some variation, within San Diego looking at the different zip codes in terms of this home price forecast. Like you can actually see here in Lemon Grove, this is a zip code where 91945, where we're actually projecting prices could be on the decline over the next year due to the trends in inventory and days on the market. However, just to the west in City Heights or in Hillcrest, we're saying prices are more likely to go up. And I think the strongest parts of the San Diego housing market where, prices are still heading up is, the further north we go here, we see some of these zip codes here like Black Mountain Ranch has a 64 home price forecast score. Strong recent appreciation, low inventory, indicating prices will still likely go up in the next couple months. You see these 60s, these dark red. This is indicating stable or upward prices. You want to look more for the translucent or blue zip codes for where prices could decline. And you can access that data for yourself at www.reventure.app. I'm going to show you at the end of this video how you can access real-time housing market metrics for your zip code so you can understand the current trends and the future trends in the market. But before doing that, I want to talk about just California's housing market more generally, because I think there's some misperceptions out there that because prices are still going up in San Diego and haven't really gone down much in Orange County, I think there's some perceptions that like buyer demand is still strong. I see people saying that in YouTube videos in the comment sections. They say there's still bidding wars, so buyer demand is still strong. However, I want to be very clear. Buyer demand in California is not strong. In fact, it's at one of the weakest levels that we have seen in the last 2 decades. And we know this because if we go to the California Association of Realtors Housing Market Update, we could see that if we scroll all the way to sales in California in the most recent month in March 2024, we still got to get the data for April. I mean, they were at one of the lowest points on record, down 4.4% year over year, down 7.8% month over month. And so very important you understand this as a California buyer. Because when you look at this graph and see actually how fundamentally low the buyer demand is, it paints a very different picture about what's truly going on in the market. It's not high buyer demand that's keeping prices up. Rather, it's a shortage of new listings. It's a shortage of new listings and inventory that's keeping prices stable and keeping prices high. And that's a very important distinction to make because we're basically on like a seller's strike in California. And that's the only reason the market's being propped up is because sellers don't want to sell. A lot of sellers in California have a low mortgage rate. In fact, California has one of the highest rates of mortgaged homes in America. 67% of all the owned houses in California have a mortgage on them. And in San Diego, 69% of all homes have a mortgage on them. And so these higher levels of mortgages being on houses in San Diego and California, it's something that's locked up the market. You guys have probably heard about the lock-in effect. A lot of people have 3% mortgage rates in California, 3.5% mortgage rates. They don't want to sell, so they're not selling. However, there's a flip side to having so many mortgages across the state, and that's the fact that there's lots of debt. And the more mortgage debt there is, the higher the risk that at some point owners hit some type of rough patch with their ability to make payments and their ability to afford their mortgage. And so I wouldn't be surprised if at some point, as maybe the economic downturn worsens, maybe more and more homeowners in California come out of the woodwork needing to sell their house because maybe they lost their job and don't have enough money to support the mortgage. And so if that happens, we could see listings increase at a time when buyer demand is still historically low, which would be kind of what you would need to see to unlock meaningful home price declines and more affordability. Speaking of price declines, I did find one listing here out in eastern part of San Diego County that I thought was really interesting, folks. This is a 3-bed, 4-bath house, 2,500 square feet, on the market for 899,000 with a 50,000 price cut just a couple days ago. And if you look at the Zillow value estimate for this house, it's like, whoa, like the current list price is kind of what the value estimate was over 3 years ago in April 2021, before much of the boom took place. And so, I did see a couple listings like this where even though prices in San Diego are still going up, I did see some listings that indicated to me like maybe some of these owners are maybe starting to feel a little pressure to sell, even though we haven't seen the big increase in listings yet. You guys can let me know if you're in San Diego what you think of this listing and if you're seeing others like it pop up on the market. But really, if you want to have a handle on what's going on in the San Diego housing market, you got to look at the data, particularly the data points on inventory, price cuts, and overvaluation. Because these data points, they're going to help you understand the current trends in the market and the future direction of the market. And to access that data, head to www.reventure.app and type in San Diego or any other city in America. Immediately just start analyzing the inventory trends in your zip code and some of the zip codes around it. Are we still seeing really low inventory, or is the inventory starting to bounce back in an encouraging way? And then from there, make sure you understand the overvaluation rates. How fundamentally overvalued or undervalued? There's some zip codes in San Diego that are undervalued. How fundamentally overvalued are home prices in your area? Because this could give an indication of how much potential downside there is. But of course, understand the downside potential with the short-term trends in the market by looking at the home price forecast score to see whether prices are more likely to go up or down over the next 6 to 12 months. Again, a score above 50 is more indicative of an appreciating market. That's more of a seller's market, while a score below 50 is more indicative of a declining market. So access that data for yourself under a premium plan on Reventure app for $39 a month. Go to www.reventure.app right now and access that data.